The Indian market opens up higher but gives up gains ahead of the September series expiry. The Nifty Bank 2 slips into red after some outperformance ahead of the RBI policy outcome tomorrow. Autos remain well bid, but that index too is marginally off the highs.
Sammaan Capital continues to rally on a number of triggers. The company's board is set to consider a fundraise on the 2nd of October. ICICI Prudential also picks up stake in a big block yesterday. The stock, however, is back in the F&O ban list.
Blue Dart and All Cargo Gati announced price hikes around 10% from the January 1st, 2026. Blue Dart is up nearly 5%, All Cargo too up around 2.5%.
A string of listings on D Street this morning sees Anand Rathi share and stockbrokers list at a premium of around 5%. SSI Technology sees a minor listing gains, but it slips into the red. While we have Solar World as well that sees a pop of in trade, but however, from the highs of the day, that gets sold in too. Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Manglam. Markets dilly-dallying between the red as well as the green terrain, for the time being trading in the red, Manglam.
Yes, Nigel, you know, the highs of today have been a lot lower than yesterday's high. But the important part is that it's maintaining at the lows of around that 24,600 mark. So let's see whether that sustains or not. But more importantly, what the Nifty Bank and the mid-caps do ahead of the RBI policy outcome tomorrow is something that we'll be watching out for. Be that as it may, let's talk about some of those new listings. We have Anand Rathi share and stock brokers, which saw a steady listing on the street. Now, the few listings today which are still holding in the green, it's up around 5.5%. We do have with us the chairman and managing director, Pradeep Gupta. Mind you, this is Anand Rathi share, the broking business. Anand Rathi Wealth, obviously, is already listed on the bourses. Thanks a lot, Mr. Gupta, for joining in, and congratulations for the listing of another of the Anand Rathi Group stocks on the bourses. You've been helping the street, look at stocks, look at numbers, make transactions on your brokerage app, etc. as well. Now, we'll be asking you some questions for your business too. Importantly, just before you went in for the IPO, the FY23 to FY25 period, revenues for you grew over 34% compounded. Profits grew over 65% compounded as well. This coincided with a surge in, brokerage and the cult of equity, so to say, as well. How much of that is now sustainable, given the sort of clampdown that regulators are taking on excessive trading as well, including the likes of F&O, etc.?
Thank you, and good morning to all the viewers. See, typically, if you really look at it, we have grown in the past, and we are constantly working towards it, that how we can have a sustainable growth. As a result, we have been talking, and this is what is our endeavor is in the future also, that how we can create our revenue stream of this company in such a manner that we constantly have a predictable growth and do not have any kind of impact of market volatility. So we do have broking business and non-broking business. The share of broking and non-broking is between 60-40. We are constantly trying that how we bring this share to 50-50. And when we are talking about non-broking is a business which create annuity income for the company. So we are constantly seeing and trying to work on that so that, our growth on non-broking constantly stay faster and bring this level in coming years and try to see how we can level of our revenue stream both ways, 50-50. And that's what we are trying to do. Once we'll do that, I'm sure we will have a more predictable growth. But as on today also, we have got a predictable growth. And coming back to your question on derivative side, I mean, typically in broking revenue, we have two parts, which is cash market and derivative market. If you really look at it, again, our share is 50% from cash and 50% derivative, and largely derivative for an hedging purposes. So our dependency on derivative is very, very less. So we are less impacted, less effective with any kind of regulations, which is talked about in the market.
Okay, all right, Mr. Gupta, congratulations on the listing. It's the green listing of the day, and good to see Mr. Rathi as well in there, ringing that bell and joining in the celebration. So good on y'all. That said, last year was a very, very good, very good a year for you all in terms of growth. Given the challenges that we're seeing, the market itself is a little bit subdued. Will you grow this year?
Yeah, we are constantly looking at growth, and as I said, we are constantly working on non-broking.
That's correct.
Side. So
That's
this year,
correct.
Again, we are surely going to grow.
Grow, yeah. So give us a guidance in terms of
if
growth.
You really see, unfortunately, today is not a day to probably share the guidance. Maybe, very soon, in 20-25 days, when we are coming out with results, I think the guidance will also be given in a proper manner. But just to tell the viewers and to you guys and share with you that our growth trajectory is also going to be continue, and we will see that constantly working towards it and constantly provide a growth to this company also.
Okay, all right. Just to understand then, and we have the other listed entity, Feroz joins in quite often, and you'll give out a guidance and he achieves that and he overachieves that. So I'll be interested to see what kind of guidance you put out. That said, the last few years have seen that margins have gradually improved. From the mid-20s, you'll have moved to the mid-30%. Do you want to hold it onto these levels, or do you think there are enough levers to see, say, the margins improve from here on? Give us a broad margin trajectory.
So I think what we are looking at it is in the past, and our whole endeavor is to constantly grow in revenue terms between 20 to 25%. And on our PAT level, we are growing and probably think and trying to work on growth trajectory of about 30 to 35% on a PAT level.
All right, so you're looking at 30 to 35% growth on the PAT level itself. If you could explain a little to us on your non-broking business. You said that a large part of that, is annuity, but I see some function coming in from MTF as well. Now, SEBI has planned a review of MTF margin rules to streamline risk management. So wanted to understand if that business gets impacted by that. And then you also have this other income component, which has been increasing. The graphics come up for you on the screen. What does that other income entail, and how is that likely to grow from here on?
So largely in our non-broking is coming from margin trading funding and distribution businesses. So when we are talking about margin trading funding, I think we have internal checks and balances and processes being created to keep our risk completely in control. And I do not see that anything which is going to adversely impact in our company while providing margin trading funding. I mean, I have shared this data, and again, for the benefit of the viewers, if you really look at and glance through our margin trading funding book, about 70% stays below 1 crore. And again, if you really look at from a security perspective, it's 75% stocks are in Nifty 500. And we are closely monitoring and have a strong, robust risk management system. I don't think we'll have any kind of a trouble. In the past also, we haven't seen any kind of a delinquencies in this kind of a book. So I think we are confident that over a period of time also it's not going to impact. And to be really frank with you, out of our active customer base, only, active customer in broking side about 9%, and total overall active customer base about 6 to 7% have been utilizing this book. So there is enough amount of inherent growth perspective also available with us. So I think we are confident that this is going to grow over a period of time.
All right.
Coming back to the other revenue.
Yes.
I think, it's an interest income. An interest income on the fixed deposit which is being provided to exchanges from time to time for getting our trading limits and margin, for satisfying the margin requirements. And that's what is being counted. And obviously, as and when we have to grow, we have to provide certain amount of securities to exchanges in terms of cash and collateral, which is in terms of fixed deposit. And that's the revenue which is also being shown as an other revenue.
All right, Mr. Gupta, thanks for giving us some color on the business. As you said at the start of the show, today is not the day to give any big guidance, but we have to pull out a few numbers from you. But go ahead, enjoy the day, celebrate it, and wishing you and the entire team all the very best. And we'll chat with you rather soon. Well, it's time to slip into a short break. On the other side, we have another company that's listed. That's Sensex Technologies. We'll discuss with them what's the strategy post-listing. Stay with us. Welcome back. You're tuned in to Chartbusters. You're on CNBC-TV18. Well, there have been quite a few listings today. Another one is Sensex Technology. It saw more or less flattish debut with a bit of a negative bias. But to help us out with how they see the company pan out, I love these visuals that come in, right? Of ringing the bell, celebrating all the hard work that's been put in. And now, being a company that's publicly listed, good amount of responsibility comes with it as well. Mr. Lalwani, the chairman and managing director of the company, joins us on the show. Hi, Mr. Lalwani. First of all, congratulations. I'm sure there's a lot of hard work that goes into the process, into building a company, and now you have various owners as well via your shareholders. That said, what's the trajectory for the business? In the next 3 years, what is the goal for the business in terms of revenue growth, in terms of margins, margin outlook? And revenue as well, you've got various verticals. Tell us, split it up bucket-wise. What would the contribution of each vertical look like?
Yeah. Hi, Nigel. Thanks for having me on the show. As you know, we said earlier that our business is divided into 3 verticals: the payment solutions vertical, the communication and fulfillment vertical, and the IoT vertical. And in the payment solutions vertical, we predominantly are catering to to various cross spectrum of customers. And with the growth in the payment card industry that we expect from now till 2030, where it's supposed to have a 12% CAGR on the growth, the kind of product mix that we have and the constant innovation that we're doing to get to new products which are relevant for the customers, we are sure that we'll be able to retain our market share and grow as the market expands. The IoT vertical for us is a vertical wherein we have accelerated growth. This is a sector for us where we are getting into non-BFSI sector, where along with the consumer and the discretionary spend growth of India, we should be able to grow our businesses in retail, in renewables, as well as in manufacturing. So IoT definitely for us will be a vertical which will grow much more than the payment solution vertical. But communication and fulfillment also has some promise in it. So net, we feel that all the 3 verticals for us are going to be growing. Definitely the IoT vertical for us will grow much faster.
All right. If you could give us a sense, Mr. Lalwani, congratulations on the listing. Over the last 3 years, if we look at it, all the ups and downs, etc., the revenues have compounded at around 25%. Over the next 3 years or so, do you believe this 25% growth rate continues? And since IoT is likely to grow the fastest, what compounded growth rate is that segment to be at? And while you're talking about IoT, what we notice is that your margins have improved as well, from closer to 17% to over 25%. Is it because IoT has higher margins? If yes, by how much?
So essentially, the margin expansion that we saw over the last 2-3 years was due to multiple factors, right? One was obviously a revenue moved from 1,100 to around about 1,500 crores. So we obviously got operating leverage out of that. Also, whatever cash was generated in the business went in, and the resources were deployed for better sourcing and more competitive sourcing. We also had advantage because our ratings improved, so we had lower cost of funds. So with these multiple factors, we saw a margin improvement that has happened over the years. Now coming to a question about the growth aspect, if you see historically, we've been a company who's been steadily growing, and with the potential in the market and the target market that we have, we hope to maintain and grow our market share. So with that, we'll definitely have healthy growth in the times to come.
What is healthy, sir? 25% plus is healthy, and IoT in particular grows at what rate?
See, IoT, if you see in the last 2 years, we've been doubling our revenue. So definitely IoT will be at a much accelerated rate of growth compared to the other verticals. It will be our growth engine. But since the revenue contribution of IoT to the overall revenue is yet not very significant, right? We will still have the payment solutions and the communications vertical contributing significantly to the revenue, and we are confident of growth in both these verticals as well.
Margins, you want to give us a broad band?
Essentially, we are confident that the current margins that we have had, we should be able to sustain over the next year or two. That's the outlook that we have on the margin side.
Mid 20%.
Yeah, I mean, the EBITDA is around 24-25%, and our PAT levels are between 14 to 15% right now. Yes.
But I reckon your PAT level margins will increase as well, because a large part of your IPO funds will be used to repay some of the debt. So that will take away at least 25 to 30 crores of interest. So to that extent, should we see your PAT expanding immediately?
So I think now we'll probably get the advantage only for half of the year, for the debt repayment. So it'll be to that extent. But definitely that is going to contribute to the PAT expansion, yes.
Right. Just a larger macro question. You said that a lot of the IoT business has been exposing you to the non-BFSI segment. What proportion of your revenue currently comes in from BFSI and how much is it non-BFSI? How much more is the addressable market there? What are you looking to target here?
So I think roughly we have about 87 to 88% of our revenue now coming from BFSI space, and the non-BFSI space is the remainder of that. The IoT business in India is slated to be about 10,000 crores. The RFID tags and the hardware business is slated to be about 10,000 crores by 2030. So a lot of our energies, a lot of our investments, a lot of our focus is on this vertical, which includes basically passive tags, active tags. We're also focusing on the SIM and the eSIM part of the business. eSIMs will probably grow in the next couple of years. So, with these three areas of expansion, we expect the IoT vertical contribution to go up, over the next 3 to 5 years significantly in our overall revenue construct.
Do you have a target for that? It's currently 7% of your revenue. Does it go to say 10%, 20%, 25%?
No, we are probably by FY27 we kind of are targeting that to be at least in the 18 to 20% range is the effort that we're trying to put in.
Okay, all right, Mr. Lalwani, appreciate you joining in. You've given us some numbers, some kind of an outlook. Wishing you, your team, all the very best. Enjoy the evening, enjoy the day. It's a big day for you all. But post your results, request you to come back on the show. And in fact, we'll quiz you a little bit more with regard to numbers and the way ahead. Well, time to move on then. For the time being, I think what we can do is we can take a snappy break. We come back, continue our focus on markets as well as on stock-specific action.
Welcome back. The Nifty briefly went below that 24,600 mark, but now has managed to hold on to that level. So that should be positive from a bull's perspective. And we have a couple of these IT names which are picking pace right now as well. So HCL Tech, Tech Mahindra, all of them doing well. Mind you, don't have a big weight on the index, but the IT index holding up with a gain of almost 0.5% should provide some support to the bulls. But it is expiry day, monthly expiry day, that too. So we have the India VIX, which too has moved to the high point of trade with a gain of almost 3%. From the broader markets, Sammaan Capital continues to do well. Back in F&O ban, but the management has gone ahead and suggested that there would be a board meet to consider a fundraise on October 2nd. That stock gaining from strength to strength. The last two trading sessions or so is up around 15%. But a lot of other stocks, Nigel, metals in particular, moving as well.
Well, that's right. Hindustan Copper, that stock, in fact, is doing well, building on to the gains as copper has moved to multi-year highs, in fact, multi-month highs to be fair. So that one's popped up. And Shalby, I think that's another stock that's done quite well. Suddenly, it spiked to the high point of the day. But we have run out of time on this edition of Chartbusters. Stay with us. Trading Hour comes up next.